Hi viewers, my name is Salman Haider. I'm the Chief Distribution Officer for Eastspring Investments. Welcome to our inaugural edition of Unscripted in Conversation with Eastspring, where we bring you bite-sized videos and speak to our experts about global markets and the macroeconomic environment. What better way to start the first session than speaking with our Chief Economist for Prudential and Eastspring, Ray Farris. Hey Ray, good morning. Good to see you.
Salman, good to see you.
How are you?
I'm great.
Are you well? I'm sure it's been a hectic week.
Yeah, it's been a bit of a circus over the past several weeks.
Absolutely. Ray, great to be here with you again. Let's start off by talking about a call you made very early on about U.S. exceptionalism being over. 4 months into the year, how are you seeing that call play out?
That's right. We started the year arguing that U.S. exceptionalism was done, that the U.S. equity markets would underperform because they were expensive and overpriced for growth. And what do we have? The S&P 500 is down about 11% year to date. Europe is up about 12%. China, MSCI China, is up 11% year to date. India is up slightly. And although ASEAN, MSCI ASEAN is down 3%, that's still huge outperformance of U.S. markets. Looking forward, that's going to continue. The main reason is very simple. The U.S. market is still about 15% above, in terms of PE valuation, its long-term average. Yet the growth outlook for the U.S. is falling from an above trend, 2.4% last year, to something like 0.5% this year, maybe 0.8%.
Yep.
So you've got a market in the U.S. that is priced for above-trend growth that is going into a period of below-trend growth. In contrast, almost all of our markets are still, in valuation terms, well below historic averages. China's about 10% below historic averages. ASEAN is about 13 to 14% below historic averages. It's really only India that's slightly expensive, but India is going into a period of cyclical monetary policy reflation.
That's great. Thanks for bringing that to life. Very compelling data. Let's talk about policy response, right? So one is negotiating on the tariff deals, especially across Asia. As you look at policy response, trying to negate the negative impact of tariffs, how are you seeing that play out, Ray?
Policy is, I think, a major driver of relative performance. U.S. policy has turned very contractionary. So immigration has basically stopped. That's a source of growth. Fiscal policy in the U.S., even before the tariffs, was turning slightly tight. And tariffs are ultimately a tax. The tariffs that have been announced equate to the U.S.'s largest tax hike since 1968. In contrast, China has announced an over 2% of GDP fiscal stimulus for 2025. India is going into a period of very significant monetary stimulus after last year, a sharp tightening of monetary policy. So the relative policy difference is U.S. turning very contractionary, Asia turning more expansionary, Asia having policy that should cushion the blow from these tariff hikes.
Great. And shifting sands, dust still settling. How should investors be thinking about these markets at this time?
Global growth is slowing. That's a period when investors need to be thinking about more defensive positioning. Defensive positioning, in my view, takes two forms right now. The first is relatively inexpensive markets. If you're really cheap, it's hard for the price to fall a lot more. Second, places where policy is working to offset the negative impact of these tariff shocks. And that really stands out in Asia, particularly in India, where monetary policy is easing, China, where there's going to be a very large fiscal stimulus, and a few other countries. Korea has introduced a fiscal stimulus. Most countries in Asia have room for interest rate cuts.
Okay, that's great. Thank you. We're going to close this segment asking everyone, what's the punchline? What's the one thing that maybe you're thinking about as you get into the weekend, or people should be thinking about as they look at the next week or 2 weeks? What's the big thing on your mind?
I think investors need to be very careful to avoid buying into relief rallies in the United States.
Interesting.
It's clear that Trump wants to back away from some of the tariffs, but he's not going to get rid of all of them. U.S. growth is still going to slow, so the U.S. is still overpriced. It's priced for above trend growth. It's going to get below trend growth. Be careful in bear market rallies. In contrast, I think you want to focus on countries, regions where there's policy support that's going to help to insulate from slowing growth. There, you want to buy the dips.
Okay, that's fantastic. Look, Ray, superb. We're privileged to tap into your intellect. Thank you for doing this and kicking off the first series of Unscripted. Great to see you.
Great to speak with you, Salman.
Thanks very much. All right, have a good one.